weekend, so I decided to quickly jump on the stream since I've been basically away from the charts for the whole week because I've been skiing in Switzerland. And yeah, the question was why I took this fair value gap for an entry long. Basically, it was because it was great timing. I just got to the chart and then I saw all those candles basically staying within the range of this fair value gap. And when I drew the volume profile from this move from here, from the downside all the way to the upside, with this volume profile to you get it if you open this tab right here, where you find your long and short positions usually. And then I'm always using the fixed range volume profile. And what I saw here is that we had a inefficiency. I can color this in a different color. Let's make it blue quickly. Right here, this volume inefficiency, and then right here we had lots of volume stacked that I basically looked at as a, let's say, lots of volume to protect all those orders that have been put into the market right here around this low. So as soon as I saw price just consolidating, ranging within this fair value gap, I decided to take the entry right here at the close of this bullish candle and went for a 25 tick stop loss. I deemed it worth the risk with my take profit target right up here at a full standard deviation, but I already took off some contracts. I entered with 5 micro contracts right here, and I already took off 2 contracts as soon as we hit the DR high here, and I moved my stop loss to break even. So this is now a risk-free trade. And in case that I'm getting stopped out at break even, wouldn't be a problem for myself. I be considering taking another long entry from somewhere right around this area where we have those 2 equal lows, those 2 wicks, and this little fair value gap sitting right in here. That's the whole reason I took the fair value gap long up here. You could also draw a Fibonacci retracement tool, and by doing that you should see, hang on, let me use the 50% level, that my entry was right around the 50% level of this, so the equilibrium, if you say so, of this move to the upside that basically broke structure here, short-term structure here on a 1-minute chart. Yeah, so the entry we consolidated right around the 50% level. That's why I chose this entry to be in a discounted price, take it up higher, and with my stop loss right here for 25 ticks. So far it played out to a total risk reward of 2.5. So we will see if we can hit our high that we formed right around 1030, 1040, something around that, with our full profit target right around 3887. Let's see. We might actually return down into this fair value gap here we left behind from 1008. So we will see what's happening. We're also about to get a new hourly candle right here at 12 a.m. New York local time. 12 a.m. New York local time, or p.m. basically, when we basically see new volume entering the market, because hourly traders, they only enter on hourly closes. So the majority of the traders, I guess, are looking at higher time frames. That's why I always like to look at hourly candle closes, 15-minute candle closes, and 30-minute candle closes in periods basically. So what we have is right here, we had our hourly open and we trapped hourly traders wanting to short this market, short into the market. We consolidated, trapped them, and reverse price on them to basically liquidate them and stop hunt their positions. We will see what we get with our next hourly candle close, because so far we are looking at a bullish hourly candle close regarding this open of the hour and our current, could almost be a doji. Let's check the hourly chart right here. So hourly traders basically, who look at a hourly chart, if they are using smart money concepts, fair value gaps, and all of that other good stuff, they see a bullish engulfing candle based off a hourly fair value gap with a target right around this 3887 profit target, which is also lining up perfectly with our 4 standard deviation. So we could be actually looking at a continuation move to the upside to fill at least this fair value gap from our general play we formed during the whole week. Unfortunately, I could not trade it because I was out skiing, but this was a beautiful frontside backside move, basically slowly over the course of 2 whole days, walking our way up along this trend line right here that already formed on Tuesday. Held support one more time, and again one more time even further, until we continued with the distribution phase, where basically hedge funds and smart money traders started to accumulate short positions while retail traders got trapped into long positions before breaking our front side move trend line. And with the 8:30 news right here, we made this move to the downside to take out day 2 liquidity from Tuesday. Right now we're somewhere in between. It's really hard to say. It's really not ideal trading conditions. So if you don't feel like trading today, don't trade in my opinion. Because right now we're just ranging. The weekly close is going to happen in 4.5 hours. So we will see what we get if we can reach this fair value gap here to the upside to maybe fill it and then reverse. Who knows? So let's go back to our chart. We are 2 more minutes away from our next hourly candle open. And we will see if I can take another contract off here at our 100 tick profit target, which is also equal to our 1040 high. Hang on, let me actually go into the live chat and see if there are any questions. Fixed range volume profile I saw on Nindo that he used in higher time frame and visible range volume profile to lower time frame. Yeah, I think there are many approaches how you can utilize the volume profile. I like to use it to see inefficiency in the markets to, for example, confirm fair value gaps. So if I delete this here quickly and I'm grabbing the volume profile, the fixed range volume profile again, I'm usually measuring swing low to swing high. And then I see basically the volume profile of this movement to the upside of our most recent swing we had, or our most recent impulse, you could say, on a higher time frame. This is a 1 minute time frame. And then if fair value gaps match up with a volume inefficiency, so very low volume in the market, I usually highlight them out even further, because right here we see we have a fair value gap, but around this area lots of orders and lots of positions are placed or have been placed into the market that are maybe, if we are going to continue higher to the upside, are likely being protected. So this of course would have been the ideal entry, but like the master also often says, is that price does not always get back to those very low fair value gaps. That's why I also choose to go for this fair value gap with the with the bias in the back of my head that we have a new hourly candle opening up right here. The first minute open up, we had a bearish continuation, so hourly traders might have been trapped short into the market with this short continuation, consolidated right inside this fair value gap below the 50% level right here of this whole move to the upside. Where do we have it? This is the Fibonacci retracement tool, and if we drag it from the low we have down here all the way up to this high that basically close above the daily range, the DR or the RDR for the New York Hill Zone. If we drag this out right here, we see that we have our 50% level, this blue line right here on this, or basically inside this fair value gap, under which we consolidated and then eventually broke out from. So now we have a new hourly candle open. We will see what's happening now. See if hourly traders jump in and move prices up higher, because right now the hourly candle closed right here looking bullish as of right now. So if there are enough hourly traders looking at the charts right now, the bullish momentum should continue to pick up. We can also have a look at Nasdaq. Nasdaq, relatively speaking, completely also filled this lower fair value gap. Yeah, completely filled it in. And now is a little bit weaker compared to the S&P. Let's have a look at the US 30. US 30 is roughly at a similar level, relatively speaking, compared to the S&P. So Nasdaq is currently lagging behind. We do not have any relevant SMT divergence happening as of right now. We formed higher lows on all three charts. We can also look at this drop. Come on, why can't I move my chart right now? Where we formed a high and higher highs here on the S&P. We formed a high and lower highs on Nasdaq. And if I go over to the US 30 or the Dow Jones chart, we formed a high right here on this wick. And we formed higher highs as well. So here we would have had a beautiful SMT divergence opportunity where you could have easily entered on this bearish engulfing candle right here at 4 a.m. New York local time, so right within the London kill zone, for a possible short entry to the downside, which got to follow through the New York kill zone. So let's have a look at our trade that's currently going on. So our hourly candle opened up with a beautiful 1 minute bullish candle. We got a pullback back into this candle, and let's see if we can hit our targets right here at 100 ticks at our most recent swing high, or if price likes to return to this lower fair value gap. All right, so if we zoom out a little bit, no. Let's keep the chart exactly like this so everything fits on the screen. Let's see if we can break this next high. We just got rejected from it here on a 1 minute time frame. Our overall target would be the 0.5 standard deviation that has not been hit as of right now. We basically had a pullback into our fair value gap, this volume profile inefficiency, below the 50% level of this whole impulse move to the upside from our DR low to our DR high. Right here, this blue line is the 50% level of which we reacted from. Let's see if we can get a continuation move to the upside to break through this little resistance here. All right, let me move all those tags. Bring to front. All right. Let's see, what's the time? It's 6:04. I've got like 15, 20 more minutes to stream live here before my family is very likely going to be complain that I'm in front of the monitor again. So let's see what we can do within this very limited amount of time. GBP USD. Who's talking? Trader. Quickly mute him. You can also ask questions in the chat right here on Discord. Do my best answering them. It was me today trading the London kill zone with one of my strategies I'm using on a daily basis. Turned out to be really profitable. I was not really interested in trading the New York kill zone from 8 until 11 a.m. New York local time because of orders, but I went back to the chart as soon as the DR range has formed. which was right here, and then I set an alert, and I received the alert that we close above our DR high. So I already got in front of the chart with our bullish bias based on the close above our DR right here. Then I marked out the fair value gaps, drew the Fibonacci retracement from our impulsive swing from the top all the way to the bottom, where I saw, okay, the 50% level of this move, so that discounted area was inside this fair value gap right here. This fair value gap was right below this volume inefficiency. And then I saw all those wicks, consolidation, dodges, whatever you want to call them, right inside this fair value gap. It did not breach the high or the low of the fair value gap. So I entered based on this fair value gap with a 25 tick stop loss, with the plan in my head, as soon as we are reaching the RDR and the IDR high, I'm going to move my stop loss to break even, to have a risk-free trade basically. And that was already a 50 tick profit target with 5 contracts, where I took 1 contract off. That was already some nice and neat profit for the day before Christmas basically. And right now I have all my take profits set at the 0.5 standard deviation, so we will see if they are going to be hit or if we're going to retrace further down back into this fair value gap down here, or if we maybe actually even see a complete reversal further to the downside. Yeah, it's always the same problem here on Discord. Before I left to Switzerland for the skiing holiday, I used to restream it onto YouTube as well, but for tonight I deemed it not as to be worth it basically. So let's see if we get a reaction from here, from our DR IDR space in between. 5 continuation higher, come on. Let's close this tab. Euro US dollar basically just ranged for the whole day today. Just say ups and downs. It's not really what you're looking forward to if you're trading on a day before Christmas. Alright, let's see. Basically filled in this massive fair value gap from Thursday the 22nd. Wicked above it, but as of right now there's nothing really interesting inside here on Euro US dollar chart, so I'm going to close this. Let's see what we're getting on the S&P 500 futures contract today. But I think I can also close this chart. Yep. Got everything set up. Let's see if we can break this level right here. Go back to our comparison of all 3 indices. Currently they all still look pretty much the same. The only difference is that, relatively speaking, we're already up higher on the S&P and the Dow Jones compared to the Nasdaq. It's already been how many minutes since my entry? Already 1 hour. Long time. Why take profit target to be hit? Luckily I already backed in some partials right here at our IDR's high, moving the stop loss to a break even. So in case I'm getting stopped out at break even, I might set an alert for this fair value gap down here and see if I'm taking a trade based off this reaction. But today's the day before Friday. Market's closing today in roughly 4 hours and 20 minutes. If we go down to the 50-minute time frame, we should see. So you could paint a picture of what the chart is going to look like as soon as it's reaching this price level right here. To make a little forecast, we could see price continuing into this fair value gap we left behind basically here from Thursday 22nd, from our impact, from our 8:30 news candle right here. So we could see price fill this fair value gap, and then, I don't know, maybe consolidate a little bit close above this fair value gap, and then weeks over. This would be the bullish scenario. Or we could be looking at maybe just some ugly consolidation in here and pretty much nothing is happening. And we will see how markets open up back on Monday. But as of right now, I mean, it's the end of the year. I wouldn't expect too much. There's there are definitely not ideal trading conditions. If you compare it to the rest of the week where we had this beautiful movement to the upside over Tuesday and Wednesday, followed by this distribution up high relatively above all those highs with a elevated down movement as soon as we broke this trend line. Not saying that trend lines always work, but sometimes they can give you some confluence. Right here, that was right during the London kill zone where you could have entered short on a potential trendline break, front side of the move that formed over Monday, Tuesday. So we had enough longs in the market, trapped them long up here as well, up high, while smart money traders, hedge funds, banks, institutions, whoever basically already positioned themselves short somewhere up here, taking out day two sell side liquidity right here at 3804. So also below a 000 level, 3800. And we basically got rejected from this level instantly, immediately, and walked our way back up. So this could have been a trade based off a round number level, 3800. And it was the plan. So I wish I would have been in front of the charts, but you can't always be in front of the charts, unfortunately. Okay, let's go back to our 1 minute chart. We're starting to hold some support on the IDR high. Let's see if we can get this continuation. So we're almost done with the first 15-minute candle of our new 1 hour period right here. This is when we're gonna get the next 15-minute candle close on the higher time frame. I always like to keep track of them. Let's color this one in yellow and make it a dotted line. And see if we can breach the 0.5 standard deviation for a successful trade here on the day before Christmas to pay for the Christmas presents. My man speaking from a cave. I can't, I've got the whole chat muted, so I don't hear all the people who don't mute themselves all the time here. And also you guys, you don't hear them twice basically. So if you have a question, just send them into the chat and I will answer them. But as of right now, I'd say it's, I don't know, hard to paint the picture of how we're going to close before Christmas here on the S&P 500 futures contract. It's really hard to say. We took out major sell side liquidity that formed here on Tuesday. This low right here. We got rejected from a 000 level. This would be the 3800 level, which is also very interesting. And we immediately bounced back up and walked our way up to the 3850, 3870, yeah, 3870 level. So right now we're inside of a 1000 tick box here from 3900 all the way down to 3800, ranging in between without any clear or given structure, in my opinion. At least since the New York news came out here at 8:30, we basically just went choppy, up and down, up and down, up and down, waiting for the RDR to form. So we will see. 15-minute time frame, and if we turn on the DR IDR, you could have maybe chose the London kill zone right here, maybe at the DR slow, to take a long position based on the 15-minute fair value gaps we formed here during the Asian overnight range for a possible long entry up into those highs, into this fair value gap. But yeah, you would have to close them out before 8:30, because otherwise, yeah, very likely all your stop losses would have been triggered. How do I use the divergence between all three? That's always a tricky question. how do you use the divergence between all three indices? I'd say you need your daily bias before you are considering to look at divergences. And if you have your daily bias and you see the divergence, it can act as additional confluence into if it's already matching up with your daily bias. So for example, here on the S&P, we made higher highs, we made lower highs here on NASDAQ, and we made higher highs here on the E-mini Dow Jones. So we see that NASDAQ is not lining up with all the other major indices. If your bias would have already been bearish based on your analysis, for example, right here we had day 1 long, day 2 longs, we saw this distribution right here up high, and by the time you got to the charts, let's say prior to 8:30, before the news came into the market and stuff like that, and you maybe would have looked at the DR IDR here on a 15-minute time frame. Let's get rid of this distribution here quickly. And you would have spotted this divergence. You could have been already looking to short the market right here around the London kill zone, where we basically got back into our London, or our overnight range, I think. That's how he's calling it. Back into this range with a bearish engulfing here on a 15-minute time frame. If you don't like to trade on a 15-minute time frame, there's always other entry opportunities into this general direction. We also broke structure right here from our trend line that has been formed over Tuesday and Wednesday, which we broke on Thursday here during the London kill zone, and we followed through all the way down to our 3,800 level, 000 level, very major level right here. We have not broken it here on Tuesday, so basically all they did was they reversed the market just above this 3,800 major sell side liquidity, started to make some more money, put in some, basically get traders, retail traders, positioned in more long positions, more long positions, more long positions. They are at the same time accumulating shorts, and distributing some longs to eventually just crash the market down here. Elevator down is how I like to call it, below the 3,800 level here, the 000 level, and basically we got a immediate reaction back to the upside again. So if you would have had that bias already, and you would have seen that divergence that formed not really during the session but on a higher time frame based on this move to the upside, you maybe would have already seen this break of the trend line here, the continuation lower up until 8:30, basically until we got this news candle where you could have also easily entered short into the market. And with that, the bias of this divergence between all three indices could have helped you with a short bias for the day. If you would have checked, for example, the daily time frame then for Thursday, so for our last day, you could have spotted maybe this volume inefficiency right here that we just got inside right here and been rejected from. You could have compared the volume inefficiency on all three charts. So for example, right here on NASDAQ, we did not reach this upper volume inefficiency, but we definitely made our way through this volume inefficiency, and depending on the asset you're trading, basically, you could have decided. All right, we seem to be getting closer to our break. Hopefully. Holding some sort of support on this line. Yeah, this could also just be an imaginary line here, but I don't know. I like to have it on my chart because retail traders look at trend lines. They draw trend lines all day long, so wouldn't hurt if you are aware of what retail traders are doing right now, or what they're looking at. If there are some major crucial trend lines in the market, like for example, the higher time frame trend line we had here on the S&P, formed on Monday, Tuesday, Wednesday. First, so we broke it, front side, escalator up, elevator down. Type of movement below 000. Beautiful setup. All right, let's see. All right, we just broke our high right here that we've gotten rejected from 2 times already. Let's see if we can actually close above it. This would be great. On our way to our 0.5 standard deviation. If we make it to here, I think the probability is really high that we might actually go into our 1 hour 50-minute fair value gap right here, which is equal to 1 full standard deviation of our IDR range right here. This is sitting right here at 3887. If we go to our higher time frame and check where 3887 would be right inside this 50-minute fair value gap. So I'd say if we get to our 0.5 standard deviation, which is actually right here at 3871 and a half, 3871 and a half would just be above our highs we formed on at 845. So let me have a look. 845, yeah. So I'd say right here we'd be looking at major buy side liquidity, and it's lining up perfectly without, like, to the tick our 0.5 standard deviation. So I don't know, I'm optimistic. We got our 1 minute close above our previous resistance. So if you're a pattern trader, get into it as long as you can. We're currently retesting it. But from our 830 news range, we could officially say that we took out the short side. Currently we just consolidated basically in between. On a lower time frame, definitely. On a higher time frame, you perhaps would not even see it, but I'd say the 0.5 standard deviation target is very likely to be hit. Right here, yeah, no, very likely. Let's see. How many ticks away are we from hitting our profit target? Price range, let's start from right where we are right now. Only 25 ticks left for my full take profit target before I head back down to talk to my family that ask me questions all day of what I'm doing in front of my screen. Let's go, let's pump it up higher. Let's hit our 0.5 standard deviation. Come on. Be awesome. We're on our way up. We're within the next 15 minutes cycle right here. 12:30. Let's see if we can make our move up within this next 15-minute cycle to our 0.5 standard deviation. I'm actually going to take off another contract of my 5 contracts as soon as we hit this level right here, which would be the, let me get the price label right here, 3868 and a half. Let me quickly type that in. Take another contract off here just to play it safe. That's also the 100 tick profit target. And I think we touched it. Did my order get filled? Yes. All right, taking off another contract here. So I'm leaving this on the chart. Now we're just waiting for our 0.5 standard deviation to be hit, which is also exactly the same level as our 844 high. So it would be within the 830 15-minute candle high. So if we check this out, this is the high we're looking forward to breach right here at 830. Let's see if we already see some divergence between the indices now. So Nasdaq is also continuing up to higher to the upside, but overall we can see that the S&P is about to make a higher high, relatively speaking, compared to our 1030 high, and Nasdaq is somewhat lagging behind. Let's have a look at US 30 as well. So on US 30, we theoretically already broke. Yeah, even if it's just 1 or 2 ticks, but on US 30 Dow Jones, we already broke our 830 news high, basically, right here. So this could be a sign of Strength, that's always now hard to interpret, because for me right now, I don't really have a daily bias right now. I looked at the daily chart. There's nothing much to say. It's a day before Christmas. It's Friday as well. So, I mean, right now you could spot some divergence. We are forming lower highs here on Nasdaq. We are forming now higher highs here on the EMI Dow Jones and soon on the S&P 500. But I'd say just from a 1 minute basis right here, this fair value gap entry played out really well with our take profit target right here at our 0.5 standard deviation. So right now I'd say we just wait and see if this 0.5 target is going to be hit. If it's going to be hit, I'd say I don't know. To be honest, I don't like this dreadful move to the upside here. I mean, we've been walking up here from my entry for the past, 1.5 hours mainly. Making a move to the upside, retracing back down, up, down, consolidate, consolidate, impulsive move to the upside, retracement back down, up, down, up, down. It's been going for that for quite some time, so I don't know. Ideally, I prefer being in those impulsive moves to the upside, not those long drawn out trades, because most of the times they don't actually end up in the direction you want to see them go to. So yeah, that's the difference. That's why I'm taking all my contracts off at a 0.5. Let's see if we can hold some support above this little double top, whatever you want to call it. We had a fair value gap up here based on a 1 minute time frame, but I wouldn't emphasize it too much. We could be forming a double top resistance. I mean, we just scratched the 1040 high. So let's use this candle right here and drag it out. That's our new resistance target that we'd like to see taken out. Let me get rid of this pink line right here. Also those two 15-minute labels. So yeah, now let's see if we get a bullish reaction of this support level here. I don't want to really call it support, resistance and all that. I just like to draw those areas out to monitor my trades. Alright, so risk of trade as of right now with a 25 tick stop loss. My entry was right here on the close of this 1 minute candle. 25 ticks. That would now be a 4.36 risk reward trade. Nice. Played out well. It took a little bit longer than I actually hoped or was looking for. I was not planning on sitting in front of the computer again for 1.5 hours, but I mean, I love it. All right, let's see. We got a test of this support area. Let's simply call it support right here at 83862. Let's see if we maybe get a bounce off this area to finally hit our 0.5 standard deviation. Drag it out further to break through our resistance right here from our 1040 high to eventually breach through the resistance up here, which would be our 830 high. Interesting. So there's lots of resistance to the upside to hit our 0.5 standard deviation, but let's not get too worried about it. We got a nice beautiful reaction of this double top support area right here. Let's see if we can actually close up higher, not just continue going lower in some sort of a bullish flag pattern. Let's have a look at GU, see what that's doing. Yeah, not much. Also still inside Asia low, London highs. So the New York kill zone has not put a new high or a new low in place here on GBP USD this Friday. Basically, this is the Asian kill zone, London kill zone, New York kill zone. So what we would be looking for right now would maybe be a range expansion here on a daily chart. Because right now we are stuck between the boundaries we formed during London and Asia. Not very typical. Usually you see a range expansion of this initial range we formed during Asia and London during New York, but as of right now, not. It's also the day before Christmas, so keep that in mind. So we might actually get some reaction of this double top support right here. Let's see if we can finally make it to our 0.5 standard deviation. E-mini Dow Jones still very strong compared to the Nasdaq. Same for the S&P. Let's have a look at. Been a while since I've checked the Bitcoin chart. See what's going on in the cryptoverse. BTC USDT. Where's the FTX chart? Let's go for the Binance chart. 15 minute. Let's go to the hourly chart. Daily chart quickly. Get some sort of idea where we're currently looking at. Basically just a bunch of sideways movement like we usually have prior to a major drop or pump, relatively speaking, like for example this drop here on November from 20 grand down to 15 and 3/4 roughly. So again, we're just consolidating within a very narrow consolidation range from this high to this low, similar to what happened here, for example. And here, even though we started to form higher highs and higher lows right here before we eventually continued further down again. I don't know, that's the reason why I don't like to trade Bitcoin. If you check the ES on a daily chart, you actually see some movement most of the times, and price is actually moving. Even if you zoom out, there's no months long period of consolidation where not much is happening. So for day trading, I don't know, I think Bitcoin and cryptocurrencies are not ideal unless you're scalping them on a 1 or 5 minute time frame, and I don't know, but still I would deem it too risky in my opinion. It's good, I'd say, I don't know, accumulating crypto could be profitable, we will see in the future. I'm accumulating cryptocurrencies, but day trading it to make some profits consistently on a daily basis, I don't know about that. Bitcoin USDT, let's have a look at gold. Oil. Go up to your daily chart and see what oil was up to. Found some sort of a double top here, took out sell side liquidity, perhaps filled in old fair value gaps right here on a daily chart from this low to this low. That rebounced off. Maybe also a bullish order block. Not looking into this for too long right now. This was Friday, so Monday opened up bullish with a reaction based on this fair value gap right in here. We've been walking our way through those bearish fair value gaps on the way down. So we could be looking at US oil maybe next year, as soon as we start trading again properly, to see if we form or if we're potentially forming a change of character, because currently this is our range from our most recent swing high to our most recent swing low. Right down here, we could be looking at a continuation move further to the downside to continue making lower lows and lower highs. But if we eventually see a change of character happening here with a close or with a wick basically above this candle's high right here around 83.32, we could be looking at a potential short-term long continuation, or maybe long-term, who knows. Let's go back to our charts and see what the S&P is doing. And beautiful, we got our reaction based off this support level right here. I don't know, I bet some people hate, I don't know, drawing up support and resistances and looking at some retail stuff, but I think it can't hurt if you don't mind putting it onto your chart. Those areas, they work, but you have to know to, how do I say that in the best way possible? You have to know where to find them, where they work. So trend lines and, for example, double tops, double bottoms and stuff like this doesn't work everywhere, or it doesn't work all the time, but the probability of it going to work is higher if you're, for example, not looking at double tops and double bottoms inside, but you're looking for them outside of a specific defined range, where you are looking, where you would generally be looking at where a low is going to be placed, for example, below a previous day's low or above a previous day's high. A double top could be an indication for a potential move to the downside. But if you're still within the range of your previous day's high and your previous day's low, it could become tricky. So we closed above the 3868.5 level. So we will see, or at least we wicked above it. We were just a few ticks short to hit my final take profit target here, 6 ticks to be exact. That's a bit annoying. So we will see. I might actually take another contract off right here, because I don't have much time left. Yes. Done and dusted. Let's wait. Drag out our support. Up in this high. Relatively, this high was placed above or inside those value gaps here that formed on December the 22nd. So I was retesting this small redistribution or reaccumulation basically. Where we consolidated, went sideways for a while until basically the stock market opened up here right here at 9:30. And with this little bearish flag pennant, whatever you want to call it, a break of this range here on a 1 minute chart with your stop loss of maybe 20 ticks or 25 ticks. This is usually what I'm going for. Could have been a profitable trade. Even if you're just going for a 2-to-1 risk reward, it would have been hit very, very quickly, followed by a new reaccumulation or move to the sideways movement, forming another bearish flag, bearish pennant, whatever you want to call it, for a continuation move to the downside. And pretty much this followed through for the whole day. We had our move to the downside, we continued going sideways again, broke down, continued moving sideways again, continued breaking down, had a reaccumulation again, went sideways, broke down, pulled back, went sideways again, and eventually broke down one last time here. And if we also emphasize what's going on here at a price level, we have our 3,800 price level right here, a 000 level. So I'd say it's important to at least be aware that we are currently below a 000 level, and that before getting down to this 000 level, we saw a low being put in place. If we go here to our 15-minute chart and zoom in a little, we formed this low right here on Tuesday where we did not manage to break below 3,803, building up sell side liquidity below here, while basically keeping this front side of the move trend line here active, making higher lows and higher highs, distributing everything again before eventually crashing it down all the way below this Tuesday's liquidity, back down below 3,800. And if we have a look at this exactly, this is what I mean with you have to know where to look for chart patterns, and let's say classic chart patterns, because what you've got right here, some people would consider it as a, well, I would consider it myself as well as a inverted head and shoulder pattern. So we formed our left shoulder right here, we formed our head right here, and we formed our right shoulder all below the 3,800 level. We broke back above this 3,800 level with quite some force right here. We left behind a nice little fair value gap inside here, and we actually went lower than this fair value gap just by maybe 1 or 2 ticks back below 3,800 levels to mitigate the last few positions, followed by a continuation rally to the upside. So entering on any of the fair value gaps that have been left behind, for example this one right here, could have been a beautiful entry long for a continuation move to the upside. The ones right here, the major ones, yeah, I'd say this could be considered more as a bullish order block right in here, but not really as a fair value gap. The next fair value gap would have been somewhere around here. If you would have placed your stop loss with 25 ticks, you would have been safe. And same here, to get back into our IDR range. Basically test the 50% level. We did not, we closed above this 50% level of our range, but then afterwards we just kept on consolidating because the market was massively short that whole time. They basically liquidated or stop hunted weak short traders or weak short sellers that got into this short trend or short market somewhere on this way down here to liquidate them in a very explosive manner to the upside. So this was a very easy reverse opportunity, even if you would have missed this whole move to the downside where you got more than this would have been your definite sell side target from Tuesday, and it would have been very likely that this is going to be targeted before the market is closing on Friday. So if you already saw this drop here to the downside with this reaccumulation here, short breakout of this reaccumulation, you've got it 1, 2, 3, 4, 5, even more times on your way to the downside. This as your major sell side liquidity target. Wherever you would have entered, I'm sure you could have caught at least, I don't know, maybe a 2 risk to reward, 3 risk to reward. I call it a day. And here during the London kill zone, during our overnight range happening from 3 a.m. until 4 a.m. New York local time, we got a beautiful setup as well. We got our close below our DR low. We went back up inside. There's not really much of a fair value gap happening here other than this one right up here. Just retested it, got rejected massively. I mean, this 1 minute chart doesn't look very nice, very choppy, and yeah, I don't know, more like a barcode or something. So to enter here on a 1 minute chart could have been tricky, but if you would have checked a 5 minute chart, who knows what it would have looked like. I don't, because I was skiing at that point of time. All right, let's see what we got. Looks like we got rejected massively right before our 0.5 standard deviation. So I'm really lucky that I closed one more contract somewhere around this area. So we will see what's happening now. We also broke our support trend line, if you want to call it that. And we're walking our way back up. This could pan out as a double top pattern, and we're just going to continue further to the downside. We will see. Could fill in those bearish fair value gaps for a continuation short, or we just stop hunted weak short weak buyers basically that got into this trend to the upside with their stop loss maybe below this low, below this low. For example, breakout traders that got in somewhere around the support, looking forward to maybe take profit around this level or even up higher with their stops all below this low now. Quickly stop hunting them and continuing into the right direction to the upside. Alright, I've got roughly around 10 more minutes to stream here, so we will see. Unfortunately, got rejected from our 0.5 standard deviation. We can check, maybe we got our 0.5 deviation hit on E-mini Dow Jones here. So if I'm going to load the new version of the script right here, DRDV version 1.3, I would have to reload the chart. Let me just quickly use the Fibonacci tool. We're going to use it from here to here, and then we're going to use the DR range template. The other way around actually. This is our IDR low and this is our IDR high. Here on US 30 we actually hit our 0.5 profit target. If we go back to ES1, we unfortunately did not hit it, we missed it here, so this would have been a way to go right here on US 30. Also, the probability of this being hit is higher than right here on S&P 500 because 0.5 standard deviation, I mean, it's still within range or within reach, but relatively speaking here on US 30, the 0.5 was placed lower than the 830 high that we formed right here. So yeah, we only breached this high on US 30, so we formed higher highs on US 30, lower highs on NASDAQ, and also lower highs right here on S&P 500, almost equal, but they're still lower. So we might actually be looking at some sort of divergence forming here. But again, today are not ideal trading conditions. If you have to take a trade today, I mean, you can do whatever you want anyway, but generally speaking, today are not ideal trading conditions compared to the ones we had all week in the last December week, which is nice. It's very nice. I know lots of traders that don't even trade during December, so I guess they're gonna be annoyed after seeing such beautiful price action here with a with 000 numbers, Tuesday low liquidity, day 1, day 2 setups, escalator up, elevator down, with distribution up high, and a super quick move here to the downside below the 3,800 level, with a beautiful inverted head and shoulder setup below this major round number level of 3,800 for a reversal move back up or a stop hunt move back up before the market's closed. I don't know, in my opinion, I can also talk about myself here. If you took any trades today, I don't know, I feel like more or less also this trade was more forced than actually, I don't know, necessary. Or I mean, it's Christmas weekend, it's the time to spend some time with your family, so we will see what's happening, if our 0.5 standard deviation is hit or not. It's gonna be interesting. I made a nice little profit. That's not too bad. Basically didn't spend more than 5 minutes in drawdown until we finally worked our way up. But for myself, this trade took way too long. It was on a 1 minute chart. I've still got one contract on, now two contracts actually, with the full take profit target at a 0.5 standard deviation. My stop loss is moved to stop loss, or I moved it to the stop loss as soon as we hit the IDR high, basically right here. As soon as that was triggered, I moved my stop loss to break even because I did not want to risk any of those profits I already secured by moving my stop loss to break even. All right. What could we be looking at? Let me quickly draw out the volume profile from this impulse move to the upside right here. Volume point of control would be sitting right around here. There's one fair value gap that still hasn't been filled down here, but I'm not sure if this is going to be a interesting point to actually look for a reversal bounce continuation to the upside. I think if we are getting back down to here, the probability is pretty high that we could be looking at a retest of this fair value gap here, right at 3.8, 3.4 and 3/4. Let's see what it's doing around this trend line. Are there any other questions before I'm heading off and leave you guys to it? Pound US dollar still inside, still ranging. No worries. Yeah, I recorded it. I'm going to post it on YouTube, and yeah, I'm definitely gonna continue next year. I don't have a set time I'm coming on yet. I'm trying to work this out. Maybe I'd say I'm going live here on Discord 3 days, 3 times per week. I'm not sure. I have to plan it out. We will see next year. So yeah, no, but I really enjoy the time here, talking a little bit. I also learn a lot myself while talking and correcting myself and getting better step by step. But as of right now, this was a nice trade. I did not expect it to take this long. That's why I actually took my stop loss to break even as soon as we hit the IDR high. I did not expect much for this trade. My target was 0.5 standard deviation as soon as I saw this bullish close above the DR. So yeah, I did not want to risk much today right before Christmas. Yeah, ICT concepts are hard to, I don't know, so to understand them and to draw them on the chart with hindsight and everything, it's pretty much, it's very easy, but trading based on ICT concepts live, it's hard. It's not for the many, it's for the few. I think he mentioned it once or twice too. He didn't put it out there for everyone to become a profitable trader or to master smart money concepts basically. But for the few ones that put in enough work, they eventually make it and they become profitable traders. Even though I don't really like that term profitable trader, I think it has been abused a little bit too much by the industry. Because in my opinion, the industry is complete garbage anyway. I mean, my YouTube premium subscription just recently expired, and it's the worst thing. Like, there's 20 different people trying to convince me that I should join their group and that I should use their strategies and blah 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 blah. Can't hear it. I can't stand it anymore. It's super annoying. Almost most of the trades negative. Yeah, I'd say stick with ICT concepts and use the DR/IDR indicator and the whole guidance this tool gives you. And I'm pretty sure you should have at least a few winning trades. And you have to make sure you're not taking too many trades. That's also another important thing, because traders that take too many trades are usually traders that take trades that are taking trades not based on rules and a strategy. They're more or less taking trades based on emotions or fear and greed. They see a super bullish candle, they jump in, they get in too late, they get annoyed, they're getting into drawdown, and they're 5 or 10 or 25 or $100 in drawdown, and they close the position and price is reversing on them, and now it would be in profit again, and they enter again, and the same thing's happening over and over again. It's usually what's happening. The best tip I could give you for that is to have a trade journal. And for example, I use Notion, or you can also use Excel. Take screenshots and actually write into this journal why you did take this trade. What was the reason behind it? Why did you consider this a valid entry opportunity? And then you can actually start to learn from your mistakes, other than just, ah, shit, that was a losing trade, I have to hide that somewhere, I never took that trade, or no, that's a little bit embarrassing. You have to face that. 1 or 2 a day, never catching missed trains. It's part of the game. It's part of the game. I went through the same stuff. It's just part of it. You have to believe in yourself, keep grinding, never give up, and eventually you're gonna make it. But no one's gonna carry you there or whatever. So they can give you advices and stuff like that, but no one's gonna carry you and tell you this little secret that's going to, yeah, I don't know, eventually bring you to the finishing line to become a profitable trader. But in my opinion, what changed it for me is it's as simple as making 1% profit a day. I mean, you don't have to reach for the stars before you can even, I don't know, walk. And for me, I'd consider walking, making 1% a day consistently. And all you have to do is, I don't know, use a simple 2-to-1 risk reward strategy. Risk 0.5%. 2-to-1 risk reward strategy, you take 1 or 2 trades per day, and you only have to average 1% every day over the course of a whole trading year, which would be 265 trading days, and you'd be 20xing your initial account balance if you compound your profits daily. It's as simple as that. But we usually like to overcomplicate things and understand everything, what's behind the market, what's driving it, and stuff like that. If you keep it simple, it's a little bit more boring, but it's a lot easier, a lot less stressful, and for beginners, a lot more profitable. I'm trying to be selective on trading with tighter stops using DR IDR. Which indicator do you suggest that I could look at? I wouldn't use any other indicators in combination with the DR IDR, other than yourself, basically using yourself as an indicator. Because the whole DR IDR system is not really, most indicators are based on previous data, so they don't really give you an insight of what's going to happen in the future, just a possibility. So I don't know, with the DR IDR, this is a full price action, price analysis concept, basically, I would say. So I wouldn't use any other indicators in Confluence, like for example an RSI indicator. I'd see no use case for an RSI indicator in combination with the DR IDR. I could be wrong, but I think it wouldn't make much sense to, I don't know, use indicators or lagging indicators in combination with smart money concepts. I think that DR IDR is available for Ninja Trader, but I'm not sure about Thinkorswim. Yeah, indicator for DR IDR, simply type in here DR slash, and then you should find it very soon. Here it's also an editor pick, DR IDR by the Mas7er, and you should find it very quickly. No one else released another DR IDR indicator as of right now. I'm not sure. I missed everything that the master uploaded or did in his live streams for the past 7 days because I was on a vacation. It could be that he released some more nice tricks, like you said, the cumulative volume. I have no idea. I have to look into that, and I'm going to do that over the holidays, basically here for Christmas and New Year's. Have a look into all the material that I missed. Maybe he dropped some more hints and stuff like that on all those topics to maybe use indicators like cumulative volume, but I will have to figure that out first myself. Uses ticks and cumulative volume. Yeah, I saw that he's using some sort of like something similar to this, like using dxy or another asset right inside here. I'm not sure. I have to look into it. It looked really interesting. Also would be real-time data, not basically a lagging indicator like most of the indicators out there. But I mean, all you need theoretically is a 1 to 1.5 or 1 to All right, I'm still there. My laptop died of charge. So, yeah, I'm back. I think what did I want to say? I think all you need is a risk reward 2 strategy with a win rate of not even 50%, and you end up profitable over the long run. Maybe not today and maybe not the day after today, but over the long run, really thinking in terms of probability and statistics, you're gonna be profitable. You just have to trust it. Tick Grid by BMISD. Okay, let's have a look at that. Okay, interesting. Let me favorite that. Okay, so what would this exactly tell me? Color up. Just interesting what's behind it, since I'm coding indicators myself too. Quest security, USI, tick, time frame, period, open, high, okay, interesting. Only build candles when there's tick data available, data retrieval, candle color, interesting. Okay. Any explanation for that as well in documentation? This indicator has several customization options built in that can be configured. Positive and negative threshold levels with show height option and color section. Zero line with show height option, blah 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 concept. The tick index is a short-term barometer of internal market strength. It shows the number of stocks trading on an uptick minus the number of stocks trading on a downtick, and is used by day traders to view the overall market sentiment at a given point in time. It's categorized as a breadth indicator because it analyzes the breadth and scope of an entire index. Interesting. Since the tick index measures the up and down tick of a universe of stocks, any collection of stocks, market index, could theoretically have its own tick index. Some of the major tick indices are USI, tick for the New York Stock Exchange, USI, tick Q for NASDAQ, USI, tick I for the Dow Jones. Interesting. I will have to look into that. That's really backtest builds confidence, still lacks the experience to see things as what charts are and execute properly. Yeah, I think now with the TradingView Premium subscription, what you can do, we're starting to form some resistance on our previous support line, So you can go into replay mode. Let's say, for example, you wouldn't have seen everything that happened prior to that. You would have spotted this fair value gap, you would have done your analysis. What you can do now is you go into your replay mode, you replay it, and for example right here, you could have entered into a buy position. You saw this consolidation within this fair value gap, and okay, you're already running in profit. You've got one contract on currently, so you're waiting. You know your take profit target is going to be somewhere around this level. So let's see how it's performing. And you can actually simulate a live trading environment lots better than just, for example, saying, okay, I would have entered here and For example, I would have entered here and I would have, could have, should have. But in the end, didn't do it anyway. So this is a new cool feature from TradingView to actually backtest and train live trading a little bit more. Do we have a fair value gap script for Thinkorswim? I'm not sure. You would have to look on the Discord here into the indicator section, I think. Backtesting questions, your scripts, Discord suggestions. Where was it? Yeah, you would have to go into the masters. It's the first channel there. It's called scripts. If it's in there, yeah, there's one available. If not, I don't think so. My stream is broken. Hang on. Should be back live now. Congrats, 525 profit in cash and a 100% success rate. Who wouldn't like that? Is it me or no video? I'm not sure. I think my screen stopped. But I'm really interested in this tick rate because it would tell you relatively. I mean, for example, let's say we're getting all my messy drawings here off that chart and we're only looking at basic stuff right here. I don't know, for example, first thing that would get into my mind is right now, just by using this tick rate as confluence, what you could do is, for example, here on the tick grid, we formed a, come on, let me use a different chart, or actually just delete everything. I'm going to end the stream very soon anyway, but just from looking at the tick grid for a few seconds, what you could, for example, do is look at divergences. We made a high and a lower high right here on our tick grid, and we formed a high and a higher high here on our chart with a bearish engulfing candle on our tick grid, which could be a sign of weakness, basically, that we are just ahead of a retracement further down. And then if we look at the tick rate as well, we'd see that we are rather in the oversold area, somewhere around here at this tick rate low, where we also started to form some sort of a double bottom. And this perfectly matched up with this fair value gap, on which I entered long, basically, right here. So this tick rate could have helped you confirming your entry long into the market, because right here on this wick down here, we formed a low, and we basically only formed equal lows right here on our price, but we formed higher lows right here on our tick rate. So this could be really interesting. I think it could help you looking at oversold and overbought areas. For example, better than a stochastic RSI. If we look at a stochastic RSI, of course, it could also help you to relatively basically tell you, okay, we are rather bullish or rather bearish or oversold or overbought. But the stock RSI is based on delayed data. If you go into the settings right here, stock RSI is based on a look back period, the KD, a smoothing. It's looking at the data of the past 14 candles. So I don't know. It's not really based on real-time tick data, like for example the tick rate, and that's, I think, a great advantage. I'm really interested in looking forward to testing this tick rate. I mean, that would be another example. We formed lower lows right here, and we formed higher lows from right here. Very interesting. I'm really excited to look into this a little bit more. Perfect. Do we have another divergence here? No, not really, but almost, almost. Here we formed a low, low, low. Let's have a look at those highs right here. Let's see what the tick rate did right here. That's awesome. Going to look into that before I go to sleep today. All right, guys, I have to get going. Family's complaining that I've been gone for too long. Unfortunately, we did not hit the 0.5 standard deviation right up here. We were 5 ticks or something away to hit our final take profit target, but unfortunately we did not hit it during the stream. So in case you're still in this trade, I wish you good luck for you to take profit. I would eventually move my stop loss to break even just to take off the risk, because today are not ideal trading conditions in my opinion. Looking at it from a higher time frame right here, yesterday and Tuesday and Wednesday, even Monday, were good trading conditions, but look at a higher time frame, even if it's just a 15-minute time frame chart right in here. You don't really want to get stuck on a low time frame somewhere in this choppy market here. So also the market is closing within the next, right now it's 1 p.m. so in the next 3 hours the market is closing basically. So I'd say it's time for Christmas. Thanks for the insights today. Did you say this was recorded? I hope it is recorded, because my computer just shut off. I think it's still recording perfectly. Yeah, I'm going to upload this on YouTube. I'm going to post it here on Discord as well, but I think I'm going to be uploading it tomorrow morning. Because I already spent 2 hours in front of the chart. Oh yeah. All right, guys, take care.